Hello, everyone. Welcome to the market opening bell on Tuesday, April 22nd. First, let's recap the market performance of Hong Kong, A shares, and US stocks over the past few days. Before the Easter long weekend, Hong Kong stocks ended with gains. On Thursday, the Hang Seng Index closed at 21,395, up 338 points or 1.6% with a turnover of approximately 192.4 billion Hong Kong dollars. The Hang Seng Tech Index rose 2% to 4,887. Over the four trading days last week, the Hang Seng Index gained a total of 481 points, a 2.3% increase, while the Tech Index fell 0.27%. Both Shanghai and Shenzhen markets show mixed performance on Friday and Monday. The Shenzhen Composite Index closed at 3,280 on Friday, up 4 points. On Monday, it reached a high of 3,298, but faced resistance at the 3,300 level, with gains narrowing. It closed at 3,291, up 14 points or 0.45%, marking nine consecutive trading days of gains. The Shenzhen Component Index closed at 9,759 on Friday, down 15 points. On Monday, it initially fell, dropping as much as 48 points or 0.5% to a low of 9,733, but later saw buying support and turned positive, reclaiming the 9,800 and 9,900 levels. It closed at 9,905, up 123 points or 1.3%. Technical analysis for Hong Kong stocks. Last week, the Hang Seng Index briefly dipped below 21,000, but found support at 20,900, ultimately holding above 21,000. This suggests the rebound wave is not yet over. Based on gap analysis, the initial rebound target of 21,580 has been reached. If the index breaks above last Tuesday's high of 21,604, the next rebound target is 21,840. To determine if the rebound wave has ended, a preliminary warning signal will be a drop below 20,900, with confirmation if it falls below 20,450. The US-China tariff war continues to escalate. The Office of the United States Trade Representative announced that the US plans to impose port fees on Chinese-made vessels owned or operated by Chinese ship owners starting 6 months from now. Additionally, there are reports that the US intends to pressure other countries to impose secondary tariffs on China's allies, aiming to isolate China and curb its manufacturing strength. On April 21st, a spokesman from China's Ministry of Commerce responded, stating, if such a situation arises, China will absolutely not accept it and will resolutely take reciprocal countermeasures. China has the determination and capability to safeguard its rights and interests. On Friday, US President Trump claimed that Federal Reserve Chairman Jerome Powell should lower interest rates, accusing Powell of playing politics by not cutting rates and asserting that he has the authority to remove Powell from his position. Powell had previously stated that under the law, he cannot be fired and intends to serve until his term as Fed chairman ends in May 2026. Further developments are worth monitoring. Trump's criticism of Powell triggered selling pressure in US stocks on Monday, with the Dow Jones Industrial Average plummeting 971 points or 2.5%, closing at 38,170. The S&P 500 index dropped 124 points or 2.4% to 5,158. The Nasdaq Composite fell 415 points or 2.55% to 15,870. The Nasdaq Golden Dragon China Index, which tracks Chinese ADRs, closed down 14 points or 0.2% at 6,469. The Magnificent Seven stocks tracked major indexes lower, with Tesla and Nvidia falling 5.96% and 4.5% respectively. Amazon, declined 3.1% and Meta dropped 3.4%. This week marks a super earnings week with Tesla and Alphabet kicking off results for the Magnificent Seven, while Intel's earnings are also closely watched. On the economic data front, the U.S. Department of Labor reported that initial jobless claims for the second week of April fell by 9,000 to 215,000, below market expectations of 225,000, marking the lowest level in over 2 months. However, the Philadelphia Federal Reserve's Manufacturing Business Outlook Index for April plunged from 12.5 to minus 26.4, far below the expected 2.2, hitting a two-year low and recording the fourth largest monthly drop in history, surpassed only by the 2008 financial crisis and the 2020 pandemic shock. The new orders index slumped from 8.7 in March to minus 34.2 in April, the worst performance since the pandemic's onset in April 2020. The prices paid index, reflecting raw material costs, rose from 48.3 to 51, a high since July 2022. The future cost expectation index climbed to 63.1 and the future selling price expectation index surged 28 points to 67.7, the highest since June 2021. Key focuses this week include the preliminary US April manufacturing services PMI data, particularly the manufacturing input price index, which may reveal cost pass-through effects from implemented tariffs, as well as the Federal Reserve's Beige Book economic report. Our stock pick today is JD Health, stock code 6618. JD Health continues to build an integrated healthcare service system, achieving deep integration of online and offline and services and products by refining its closed-loop business model of medicine plus testing plus consultation plus pharmaceuticals. It enhances the user experience for online medical consultations and medication purchases, maximizing the value of Internet plus healthcare. As of December 31st, 2024, the number of annual active users reached 183 million, with an average daily online consultation volume exceeding 490,000 in 2024. Year ending December 31st, 2024, the group maintained high-quality growth. Revenue was 58.2 billion yuan, up 8.6% year-on-year. Profit attributable to shareholders was 4.161 billion yuan, surging 94.3% year-on-year. Gross margin was 22.9%, up 0.7 percentage points from 2023, driven by changes in revenue mix. Regarding its retail pharmacy business, JD Health continues to strengthen its self-operated model, enhancing competitiveness in its online platform and instant retail businesses. The complementary strengths of its three business models have improved product variety and availability. Its healthcare services, the group continues to enhance its integrated online-offline healthcare services, including expanding at-home rapid testing services. It launched 149 home testing products across 12 cities, offering users testing and inspection services equivalent to those in offline medical institutions. During online consultations, doctors can issue electronic test orders based on patient conditions, with nurses or delivery personnel collecting samples at home. Doctors can then prescribe medications based on test results, and users with medication needs can purchase drugs online, enjoying a one-stop medical service experience. Smart healthcare and digital health. Leveraging its JD Tianxun medical large-scale model and the industry's richest online healthcare practice scenarios, JD Health has developed products and solutions for users, medical professionals, and institutions, promoting the deep integration and application of medical AI models across various scenarios. For users, it has launched AI health assistant Kang Kang, AI mental health companion 疗愈小宇宙, and smartphone blood pressure monitoring services, aiming to build an online healthcare service ecosystem entry point. For doctors, it has developed intelligent doctor assistant services enabling clinical decision support, smart patient management, and clinical research functions. Hospitals, it has upgraded in-hospital processes with smart technology, providing patients with a more convenient medical experience. Investment recommendation: buy at 34.5 Hong Kong dollars, target price $37.5, stop loss $33. I do not hold the above stock.